If you are a federal employee, you know there are constant annual changes and adjustments to important numbers, which affect your benefits, whether you're actively employed or separated from federal service. In this video, I'd like to give you updates on some of the more important ones. For starters, let's go over the changes to the Federal Employee Health Benefits, or FEHB. So the Office of Personnel Management stated that the average total premiums for current employees and retirees enrolled in plans under the Federal Employee Health Benefits will pay 4.9% more on average for healthcare premiums in 2021. Now, this increase is driven by long-running upward pressures on healthcare premiums. The good news is the enrollee average increase was 5.6% in 2020, so this increase is certainly lower than last year's increase. Next, let's look at the Thrift Savings Plan contributions. So the IRS has recently announced that contribution limits for 2021, and it turns out the limits will stay the exact same as they were in 2020, which is $19,500. So these limits define the contributions that can be made into the individual Thrift Savings Plan accounts for the calendar year. The limit of $19,500 applies to the traditional and the Roth contributions made by an employee during that one calendar year. The combined total contributions cannot exceed this limit. The elective deferral limit does not apply to agency automatic contributions, agency or service matching contributions, catch-up contributions, traditional contributions made from a tax-exempt pay, or amounts that were rolled over into the TSP. So for 2021, catch-up contributions will also stay as they were in 2020 at $6,500. Here's how catch-up contributions work. If you're a federal employee who is 50 years of age or older and have maxed out your TSP contribution limit of $19,500, the IRS gives you the opportunity to contribute an additional $6,500 on top of the $19,500, taking your potential all-in contributions to $26,000 for 2021. Okay, so at this point, I'd like to speak specifically to the retirees. Your cost of living adjustment, or what's often referred to as your COLA, was recently announced that it will increase 1.3% for 2021 for FERS and FERS annuities. The concept behind COLA adjustments is so your pension hopefully keeps pace with inflation during that calendar year. So this adjustment is a bit lower than the COLA from last year when FERS and FERS received 1.6% adjustment. Further, the cost of living adjustment to Social Security is also being increased 1.3% from last year, like the COLA adjustment for federal pensions. Now, let's discuss Social Security earnings limit increase and what it means to retirees. If you weren't already aware, you are absolutely allowed to work in retirement while taking your monthly Social Security benefits. However, Social Security has some limits in place as to exactly how much you are allowed to make before your Social Security benefit is affected. So the Social Security earnings test only applies to people below their full retirement age, or what's referred to as FRA. Now, for most people, this is currently between 66 and 67 years old. So if your earnings exceed a certain level called the earnings test exempt amount, Social Security withholds a portion of your benefits. The earnings limit for workers who are younger than the full retirement age will increase to $18,960 in 2021. So essentially, this means that Social Security will deduct $1 from your benefits for each $2 you earn over $18,960. The earnings limit for people reaching their full retirement age in 2021 will increase to $50,520. Now, in this scenario, Social Security deducts $1 of your benefits for every $3 you earn over the $55,200 until the month the worker turns their full retirement age. Once you reach your FRA, you are no longer subject to the annual earnings limit. You can go out and earn as much money as you like without incurring any reduction to your Social Security benefits. These exempt amounts generally increase annually with increases in the National Average Wage Index. So one very important note on any benefits withheld because you exceeded the exempt amount while you were working in retirement. The good news, the benefits are not lost, they're just delayed. So once you reach your full retirement age, your monthly benefit will be increased permanently to account for the months in which your benefits were withheld. So FERS employees who retire on an immediate annuity before reaching age 62 are also entitled to receive a FERS Special Retirement Supplement, or what's often referred to as the SRS. So this is a payment that you'd receive in addition to your federal pension, and it was originally designed to help fill the gap between when you retire and age 62, which is obviously the earliest you can begin drawing Social Security benefits. Now, many federal employees don't know this, but the Social Security earnings limit test also applies to the FERS Special Retirement Supplement, so please keep that in mind. So there you have it. So whether you are an active or separated federal employee, it's extremely important for you to stay on top of the changes to your benefits every year, since they can certainly affect your numbers now and throughout retirement. While you have no real control of these adjustments, just being in the know is critical so you can ensure you're doing what you can to maximize your federal benefits.